and welcome to the Mortgage Home YouTube channel. My name is Richard Purnell. From the Mortgage Home, we are your buy-to-let mortgage experts. Now, in this video, I want to talk to you about 80% loan-to-value products. Obviously, they're pretty niche at the top end of the loan-to-value system, and they're an amazing bellwether of what's going on in the market, the property market more generally, and what lenders, economists, and other experts are thinking about the direction of travel. And that really then gives us as landlords confidence about whether we should be buying right now or not. Before I get into that, if you haven't already, please, if you would like to subscribe to the channel, that means you'll get notifications every week when we release more content. And if you want to like our content, that also obviously gives us a little bit of feedback that we're sort of saying and getting about right and giving you sort of the content that you find useful. Anyway, let's get on with it. So, 80% products. As I said, they are a barometer of how lenders, economists, and the other property experts out there that are advising the banks about the direction of travel of property. Because to be sure, if they feel that there's hard times ahead, if supply is greater than demand, if there's a potential for recession, anything that's going to impact negatively on property prices, 80% products are getting pulled immediately, and you'll get that indication. So the flip side of that, of course, if we start to see more 80% products coming out onto the market, then that as landlords should give us absolute confidence that we can go out there and start buying, and rather than sitting on the fence and wondering which way the market's going to go. It's an amazing bit of data to give us that confidence. So I want to pass that confidence on to you. I last looked at this back in 2023 in any detail. And so again, I looked at it now. So we've got these two sets of data to compare to. So let's get straight in, shall we? Okay. 2023, as you can see, these are the number of lenders, not the number of products. That'd be quite worrying. But in terms of lenders, we had 18 lenders offering products in personal name at 80% loan to value, and 7 lenders offering products on a limited company. Now look at 2025. We're essentially double more if we look at limited companies. 32 instead of 18 and 18 instead of 7. So in summary and in simple terms, we should have that confidence. We should be taking a lot of confidence as landlords from that data, that if those lenders are thinking that the market is not only stable, but actually starting to go in an upward direction, then if we were in any doubt whether now's the right time to buy, then that should be eradicated. You should be coming off the fence and buying. And by the way, 80% products are also available on a refinance. So if you're looking to not only minimize your cash deposit if it was a purchase, but you want to release as much equity as possible, then as we can see, we've now got, a real good chunk of lenders to go at, which also means there's more competition at that level. Whereas back in 2023, only 7 lenders on a limited company. That means there's not a lot of competition. Rates were higher. So I've also seen that rates are dropping. Let's get into that because I want to give you an idea of what those rates are. Now, I've given you 2 options of products here. Obviously, there's hundreds of them. But if we look at absolute lowest rate, so therefore ignore any other fees associated with that product. And I know for the majority of people this won't suit you, but there'll be a small number that it will, where cash flow is the absolute priority. So a company called Molo, 3.23 on a 2-year fixed, but with a huge whopping 6.5% arrangement fee, just sticking the throat for most of us. However, if you want to just maximize your profit or improve your cash flow, keep more of that rent in your pocket, and you're willing to give away a little bit more equity because the arrangement fee can be added on, then this actually might suit you. However, I get for most of you that isn't. So let's look at the other one. Best VFM, value for money. In other words, the more rounded, balanced interest rate plus other fees. What gets the balance right? Furness Building Society up in Cumbria, 5.09%. It's another 2-year fixed with a 995 arrangement fee. Now that static's a fixed fee. So the higher you're borrowing, the lower relatively that arrangement fee will feel to you. But what if you've got your property within a limited company? So again, looked at 2 deals here. Here we go again, Molo, because Molo happen not to differentiate their products, whether you have a property that's just owned in personal name or in a partnership, or whether it's within the envelope of a limited company. They will give you that exact same rate. So we've seen that same product again. When it comes to best value for money product, Bath Building Society are standing loud and proud there. 5.29%. Now, here's a little left field thing. I've been talking about fixed rates up to now. This is a 2-year discount. And absolutely, if I was a landlord looking at 80% products, I'd be very, very intrigued with a 2-year discount because, of course, rates have started to drop this year. The Bank of England have already dropped rates a 0.25%. I think they're likely to drop again pretty soon. And, hopefully that will get passed on in further rates dropping. So why wouldn't we have discounts on the table? As a little bit of an aside, I'm going to do a piece on discounts soon because lenders are starting now to react to demand from landlords for more discounts. Still, it's heavily weighted to fixed rate products out there, but it's starting to change. So I'll do a piece on a wider piece on discounted deals. So that means that if the Bank of England drop rates, it's highly likely that if you had a Bath Building Society deal, then your interest rate would drop, your monthly payments would drop. And we've also got a fixed fee. Now, it's $14.99 here, but again, it's fixed in stone, irrespective of the size of the mortgage you are taking out. So, well done to Bath for coming out with their 2-year discount. If you want to have a chat and get it personalized, because this surely cannot be taken as advice, it's just generic information. We don't know whether that would suit you, whether you would even be eligible. Of course, you know this. So if you want something that's specific to you, just book some time. Our link to the online diary is in the comments below. Have a chat with the team, talk about 80% deals, and let's see what we can do for you. See you on the next video.